This is Bruce for Ola Prime, taking a look at the technicals for silver, the dollar, and the S&P 500. So I want to start with silver today because we have a little bit of action today. You can see that silver broke out of this previous swing high right here, these swing highs right here, this swing high right here, showing strength and triggered a continuation of this advance, and therefore potential continuation of this larger advance. Not only that, but how did it do? How did it get here? Well, it pulled back first, dropped below yesterday's low, bearish, then flipped totally around and closed near the high of the day. So this is a bullish reversal that should have further upside to go. The first target here, 78.6% at 33.56 and the 33.72. Which is an extension of this A, B, C, D pattern right there. So this is the first zone. The second zone, target zone, is up here at 34.51. And then we can also throw one more in really quick, A, B, C, D pattern here for this small one, which targets, I'm going to use the main target, which is the 100% alignment, where both legs of the pattern equal each other as far as the amount of price appreciation that occurred. And so that target is up here at 33.76, giving more validity to this general range up here and potentially increasing the chance that it could advance above this high right here at 33.39. So that's the key. So all this is about breaking out above that. Also keep in mind that we have this parallel trend channel, and that can also be watched as an area of potential resistance on the way up as well. Okay, moving on to the dollar. The dollar broke down from a large head and shoulders pattern. It continued to drop through the 200 moving average, through this trend line, which marks the top of this consolidation range with no hesitation, stalled briefly around the 61.8% retracement, crashed through it, and now it's attempting to find some support at this previous support area right here, resistance, support, support. So it's a rough range right there. It's not perfect, but here it's obvious and perfect. Whether it matters or not remains to be seen because we clearly have a continuation of the downtrend with lower lows and lower highs. But we also have another level here, which is a completion of an ABCD pattern where we have the A, B, C, D. So that means that the second wave down, starting from this high here, the AB wave down, the CD wave down, is 200% of this first wave. Now, you could argue, why are you putting it there? Maybe you should put it here. And there's some truth to that. It's really just to look to see, does something fit? Well, it fits pretty good, actually. And so because of that, I want to pay attention to it. So there's no sign of a bullish reversal, but there could be around here, of course, a drop below today's low, 102.84. That keeps falling is a breakdown from this potential support zone. Moving on to the S&P 500, as noted previously, and we did drop further today. So the correction so far off the high is 10.1%, and that it almost reaches this larger retracement or correction back here that began in July 2023. So we have a match, and therefore we have a potential bottom just based on the fact that we have some symmetry between the current decline and previous declines. Now, what happens next will tell us more, but for now, let's just look at that scenario. And we also have some potential support. There's a 78% retracement of this upswing. There is a 161.8 extension of this retracement, the retracement of this rally, and it's very close to completing the 61.8% retracement of this larger ascent. So no indication that we've reached the bottom, but we could be certainly closer to a bottom if we haven't reached one already, and we'll be watching for further signs to indicate whether that is correct or whatever that is incorrect. Now, one thing to keep in mind is that we drop greater than 10.9%, then we have a correction that's bigger than any since October 2022, and that would be bearish and could lead to lower prices. Now, when I'm looking at a bottom here, I'm thinking of a bottom for a tradable rally that could turn back over. We don't know what's going to happen next. Obviously, we have the 200 moving here, moving average here, potentially significant resistance at 5,735. That is a key level, and the 38% retracement Fibonacci is up here a little bit above that level of 5,765. All right, that is it for today. Any traders, have a great week.